Morning, everybody. Welcome to the early investor gets I don't know, student loan debt worm. And it's the only show on the internet that I know of that reads the fine print. So grab your coffee, maybe a monster. Let's jump right in. We're talking about the American dream here, or what's left of it after we factor in interest payments. There's a certain kind of headline that just makes you want to sit back, sip your monster or your latte, and say, well, isn't that special? This week we got a real gem of a bit of news from the New York Fed. Apparently, U.S. household debt has now soared to new all-time high record-breaking champagne-popping highs of $18.6 trillion, trillion with a T, trillion, 18, almost $20 trillion. Holy bananas. That's a lot of consumer debt. It's kind of like we're competing with some kind of national sports team to see who can own the most money. Maybe it's owe the most money. Who can owe the most money? And let me tell you, we are all winning this game. We've racked up mortgage debt, credit card debt, auto loan debt, student loan debt. This is a beautiful debt-fueled symphony growing higher. It's like we're trying to catch the U.S. government national debt. The government tells us this is a sign of a resilient, growing economy. I guess, in the same way that a ship taking on water is still technically afloat and headed to the destination. But here's where the story gets maybe a little more interesting. It's not just about big, scary numbers. It's about the cracks that are all over the place in this economy right now. One of the biggest cracks has a name: student loan debt. Remember a few years ago, the government, in its instant infinite wisdom, put a pause on everybody having to pay their federal student loans? It was a party, a forbearance for all. Young people were out there living their best lives, buying the avocado toast, maybe even playing some meme stocks. It's a beautiful debt-free mirage. Well, not so debt-free when the bill comes due. And the party's over. That forbearance, that debt pause, it's over. The pause button's done. Removed from the table. All those payments that were forgotten between 2020 and 2024, they're suddenly reappearing on credit reports. And for a lot of people, it's kind of like a financial jump scare. One day you're sitting in a nice 700, 750 credit rating. The next day, you're getting mail from a guy named Vinny who wants to talk to you about your outstanding obligations. And the numbers are kind of staggering. We're talking about 9.4% of all student debt is now in the seriously delinquent or higher category. That's almost 1 in 10 people that have student loan debt. And here's the maybe kicker in this story. That part, well, this is where it takes a twist, right? For people aged 50 and over, 20% of their student debt is effectively in default. So when you look at the big picture, there's people being more responsible. When you look at the upper echelon, people 50 and over, these are people that should have gotten their education, should be making it work. Over 20% of their student loan debt is effectively in default. Let that sink in. These aren't kids that just graduated. These are people that should be getting near retirement. And instead, they're staring down a mountain of debt from a degree that they got maybe when the internet still made dial-up noises. Their credit scores, they're getting vaporized. Their access to new credit cards, car loans, you name it, not going to be so good. They're going to be in the subprime lending category. So, how do we take advantage of this? How do we make money off of this? We don't panic, right? We look for opportunity because in every crisis, there's a transfer of wealth from haves to have-nots, or, like I always say, everybody's out there just trying to make some of your money into some of their money. So let's first talk about the obvious winner here, debt collectors. Companies like PRA Group, PRAA, that's Papa Romeo Alpha Alpha, is the ticker. Encore Capital, Echo Charlie Papa Golf is the ticker. They might be getting ready for field day, right? Their business model is simple. They buy up defaulted debt. They buy it at pennies on the dollar from those loaning. And they get to work collecting. And with student loans, they have special power. The government can garnish wages. Up to 15% of your disposable income can be taken right out of your paycheck before you even see it. This could be a pretty sweet deal for these debt collectors. Number two, think about the aftermath. When your credit's trashed, what's the first thing you want to do? Probably fix it, right? This could be a boom, potentially a boom for credit repair services. Financial counseling companies, people are probably going to be desperate to get back to spending with credit. And these companies are set up to help, especially if you pay them. The third, consider ripple effect on consumer spending. If millions of people are suddenly not able to borrow and buy stuff, they stop buying stuff completely or mostly, especially the expensive, non-essential stuff. I mean, think about it. Those 50 and older people, they're not usually buying avocado toast. They're usually got the big screen TV, the luxury vacation, the headliner designer handbag. But those things probably aren't happening if you're in default student loans and getting your wages garnished. So consumer discretionary stocks might have a little bit of problems. Take a hard look at your portfolio. See what you're exposed to. If you're exposed to a tapped out consumer, be careful. And here's the contrarian play. A little twist in the story. While everybody is freaking out about this consumer debt hitting all-time highs, the housing market, actually surprisingly stable. Mortgage delinquencies, still pretty low, even though they've been climbing a little bit. Why? Well, because the people who got mortgages in the last few years had to have pretty pristine credit and a solid down payment. The lending standards have been pretty tight. So while the student loan bubble is pretty much crushing people, the housing market might just be a safe harbor in this storm. The average age of a first-time homebuyer hit 40 last month. That's pretty wild. That's not young people. Companies related to home improvement, even home builders, could continue to do pretty well. So there you have it. The American consumer drowning in debt. The student loan crisis is the anchor pulling us all down. Kind of a sad story, but it's a story of opportunity. I paid my loans off as fast as I possibly could. It's a story of understanding the flow of money, positioning yourself to be on the right side of the transfer of wealth. And as always, you should do your own research. Make sure you believe in what's happening. Don't just listen to me. I'm just a guy on the internet. Be careful out there. Don't be afraid to look for profit in the panic. It's the only way you get ahead in life is take advantage of situations. may be horrible, but the early investor gets the worm or the nest egg. Anyway, be careful out there, everybody. Be careful. If you got student loan debt, why are you freaking trading? Be careful. Be careful. I'm getting feels like crazy here. Alrighty. All trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation here intended to be informational, educational, fun, entertaining. Not a recommendation to be buying or selling anything, including stocks, options, bonds, forex, futures, cryptos, treasuries, stuff from gurus like me. If you don't trust me, don't buy anything. All right. I'm Scout's Honor. I'm just trying to provide stuff that I think can help you. If you don't believe in that, don't buy in the first place. All right. So many people buy stuff and then they're like, kick the tires and refund. I don't understand. I don't understand why you buy it in the first place. If there's no holy grail. In fact, one of my Termite Trading Lab members the other day said he's still looking for the holy grail. There's not one. You're not going to find it. It's not out there. You just got to find the thing that works for you and keep doing that over and over and over. I keep showing off little things that work. There's no one strategy. Like, this is the thing. People are asking me, hey, JT, what do you do all the time? What's the strategy you go to every day? This right here, 50K challenge, now up to all time over $31,000. This is where I'm building my own $50,000 a month. The goal here is 50K a month income, reliable. The key word there, reliable. I'm not going to be taking like 200% and losing 150%, and gaining 300% and losing 200%. Like that's not reliable. Reliable looks like this. Right there. I just started this tax day, which is going to be quite a few days ago. Year to date, here you go. I started this challenge tax day. Why? Because, clue you in. This thing I do, it's a boom and bust type of thing. Come out with something hot and new, boom. Can't think of any great ideas to get new people coming in, bust. And it's a story of ups and downs. Why do we gotta, so many people are like, why don't you just keep doing the same thing you've been doing? Honestly, people quit buying things. And the publisher behind me sees that. And they keep pushing me to come up with new ideas so we can sell something new. Because people quit buying the thing that's been around for a while. It's just the truth. Like, you may not like it, but that's why you see what you see in the financial guru type industry. People always come up with some new twist on something they've been doing. But in the background, I wanted more stable income. Something I could count on. So that's what I'm doing right here. Building this for myself. This is not an advertising gimmick or whatever. This is me building it, and I'm doing it in public and showing people what I'm doing. Year to date, almost $32,000. I don't have to tell you, that's not 50K a month. Why 50K a month? Last year, I kind of averaged about that. It's actually a little lighter, but I averaged right in 50K a month last year with everything I was doing between trading and guru stuff. I was able to help a lot of people, do a lot of good. This year, well, not really close to that this year. Last 3 months, averaging under 3K. This month, 4.5K. Growing it. Now, year to date, I did have a nice big win on Rocket Lab. That boosted it up pretty good. But the last 3 months, just kind of grinding along. Building this up, trying to get it to a reliable $50,000 a month. Yeah, what's your goal? What allows you to help people? What allows you to do good? That's my goal. 50K a month. Working hard on it. Now, how do we make money today? Ooh, look at that, pins. Coming back up. Like it. I sold that 27 strike. Let's put a 28 on here. Right at the place I sold. You grieve, bunch of alerts. FTNT, let's check this out. Yesterday, I was on Market Masters, pointed out that FTNT was you could make like 30% ROI annualized if you went for this Friday's 69. Earnings coming up yesterday after the close. It did drop down to 78. But if you were at 69, guess what? That one's looking pretty sweet right now. Pretty darn sweet right now. Let's jump onto an option chain here. If you'd done the 69, oh yeah. That premium's evaporating right there. Doesn't look like anybody jumped on it either. Anyway, hey everybody. Hey Don, Rob, Hugh, Serge, Nikki, Craig, Swinburne, Mary, Terry, Diane, B, Ted, Mad, Will, Andrew, Cliff, Scott, Darren, Skaggs, Marianne, Frank, Dan, Rongamer, Joseph, Ed, B, Kimberly, my favorite subscriber in the chat, John, Gary, good to see everybody. And you gotta be careful out there. All right, you might lose money doing this thing we do called trading. You might lose money. This is yesterday's list. Refresh. Reload. There we go. There we go. That's today's list. I want to point out something on ES here before we get too down the rabbit hole. So this right here, so far off this low. This low is the low I'm talking about. That was only a 3-wave move. But we got up near the level that can be bullish. So it's kind of a weird 3-wave move. Now, the retrace right here. Not very clear. Looks a little bit like 5 down. And then an extra piece. So, what I really see right there, 3 down. Or 3 down, 3 up, even though that went a little lower, it still works. Lower high. If we break down below these lows, that's an A, B, C. And if we overlap this, it's muddy. 3 up, 3 down. Muddy. Not clear. That's the big point here. So, might be like, well, where does that put us? That's the difficult part. So I can't really be sure because there's no clear price action. This is unclear price action. And if anybody tells you it's clear, they're full of malarkey. So if some way this is going to get continuation because it hit a 1618. Pretty close anyway. We want to see this holding in this vicinity. But since that was corrective, it could come all the way down in here and still turn around. So really, this low is kind of our tail right now. As long as we're kind of staying above it, it sets us up for the next move higher. This high right here this morning, probably the high to watch. If we can break out up through it, we're probably going on higher. Probably trucking on up. Next couple weeks, probably going to get to 7,000. Now, if we break down below this low down here, probably still flushing it out. When you look over here, we're still sitting here on the extreme fear. This thing not getting there. Oh, came up to fear. Yesterday, right at the close, we were sitting here at extreme fear. This morning, people are easing back a little bit. 1 month ago, we were agreed. Usually, we got to be up here to get a big pullback in the market. And then that pushes us down here. And then we make a bottom, and then we shoot back up. It's just a big oscillation. So when we're down here in the extreme fear, like we have been the previous close 24, a week ago we were at fear. When we're down here at the bottom, probably going higher. And we tipped the boat, right? Just because people are scared doesn't mean we're going down. It's just one of those, weird things. Like we can't push the market down when everybody's prepared for a move down. Usually we don't just go skyrocketing higher when everybody's prepared to rip. So we have conditions kind of for a nice pop because everybody's scared. What does the market do when everybody's kind of like got protection and all this stuff? We shoot higher and stop out all the protection. It's just kind of what the market loves to do. So NASDAQ is a little more clear here, funny enough. 3 down, 3 up. Probably looking for another move down. And if we can hold right above this vicinity with this move down, looks like we're going to push right down in here. This could be kicking off a 1, 2, 3, 4, and then we go up, make a high higher than that high. This would be a 5. It's going to have to be bigger than this move because this move is small compared to how much we would need to come up for that move. May just be a nominal higher high. Probably come back down again because this would be a 1 and a 2, more than likely, and push us up for a 3 that could be very aggressive to the upside. See how this was very aggressive to the upside? This one would be a higher degree with bigger potential. So if we get this kind of chop in the next day or two, this is kind of a strategic, calculated potential. Now we got to hold, if we get below this high, this pattern's not gonna, like, this is not the high probability pattern anymore. Like, don't ignore this. So this is a key level right here on NASDAQ. If we start overlapping this high over here, this high right behind me, making sure it's not behind my head, that high, if we start overlapping it, niche Keats, not good, no bueno. As long as we can dip lower low and then come back up, make a higher high, retrace, that would be the opportunity. It doesn't have to do this, but this would be an opportunity for a A nice size, aggressive move up like we had right over here. Only bigger. Only bigger. How much bigger? Can't really tell you what to target until we get more price action in here. We haven't filled out the pattern. This is the stuff I wait for every freaking day. Sitting here looking for this stuff. So let's just make an educated guess. That's the size move where we top out when we get to the 5. For those of you that are having trouble visualizing, let's just put the numbers on here. 1, 2, 3, 4, 5 right there. Like that. This retrace would be the next 2. Be looking at it to bottom in the same vicinity as the 4. Let's grab the tool again. So this would be a 1, 2, 3, 4, 5. Move that up to a higher degree. Like this. We'd be looking for this move up, this retrace, this next move up. Come on now, delete those. There we go. We're looking up at this wave 3 to come up here, 4 and 5, and maybe push us on up to that 27,000. So this would be the big up. Can go, if it's going to be a 3, it's going to go pretty aggressively. Could be just a few days, maybe a week. Then we'll probably, if this is the, whatever this 2 is, this will probably take 3 to 5 times longer. So if this 2 takes a day, this could be 3 to 5 days. Of course, the market can do whatever it wants to. I mean, we just did this back here. It took a couple days. Then we'll probably go shooting on up here. That could be out to the middle of the month. Like, I don't have time frame. I'm not trying to predict time here. And why don't you predict time? Because it's very difficult. This 4 that we're in right now could take another day, even, if this is a 4. If it busts down below this key level high from the eye, the little baby 1, if we break below that, all bets are off and we can just come on down here and then start over again. Clear as mud. Let me know in the chat. This is helpful, beneficial. Kind of providing a roadmap. Usually when the market gets real clear on the price action, this one's clear. This one is not. There's not clarity here. If this one can maintain this, big up potential. If it breaks down, now it's not clear. All right. Dun, dun, dun. Russell, that potentially has 5 up and working on 3 down. It's messy, but that potentially was 1, 2, 3, 4, 5. Even though the 4 was teeny tiny. So this can come right down in here and bounce and go higher. Oil. Record U.S. production announced this week. Inventory builds across the board. And, oh, thank you, Pauline, for being a channel member. Probably going down to low 50s. Probably. Breaking down below those lows. Talked about that for a few days now. Blowing out the head and shoulders pattern. This is how head and shoulders fails. Looked like it's going to be a reversal. And it's failing out. So probably going to go lower low. At least in that. And probably lower than this. These lows back over here. From earlier this year. These have been the lowest in the correction since March 2022. Anything down here can finally finish up this pattern. But right now, it's not complete. That wasn't impulsive. This went deep and needs another lower low to finish this up. My target on the whole correction has been down here for a couple years, and we just keep waiting on it. GC. Getting a little green this morning. Earlier when I looked at this, pretty sure it was red. Yeah. Watch out. If we can keep on this 15-minute positive move here, we could push higher, but this is just real choppy and overlapping here. There's the drop. Here's what we've done since. And we're just kind of stuck right here. Looks a bit like either some kind of B wave with lower highs and higher lows, or some kind of wave 4, bigger picture from the low over here. Either way, that would be corrective. The trend into this was down. Corrective price action, continuation, down. Not for sure. It's a low probability thing right now. I just would be very careful messing with this. Be careful getting long, be careful getting short, be careful. This is not reliable price action for doing anything, especially with the lower highs and the higher lows. It's an unreliable pattern. I call it the watermelon seed squeeze. It's unreliable. You think about it. You squeeze a watermelon seed, try to pop it in a certain direction. Usually you have no idea where it's really going to go. It's kind of what happens here. Bitcoin. I don't have anything great to say at the moment. This possibly was a bottom. We're not getting through all the roadmap lines. Pushed back up through the 5-minute, no problem. But we kind of did that in a 3-wave fashion. Kind of did that. Not really good for continuation. We didn't even hit. So this proportion right here, the difference, the big difference between being bullish like it was on NASDAQ and being kind of questionable is the fib levels we hit on that third. When we got 3 waves off the low, if we're stopping in this zone, right in here, that's usually a correction, trend, correction, continuation. Now, when we stop in this zone up here, or higher, we go 1, 2, 3, and then do some sort of corrective thing. That's bullish for a reversal, right? That means that this trend was probably done. This is a new start of a potential trend. Looking for that correction to hold here and then break back out higher over this and get continuation higher again. That's a reversal. This right here didn't even get up into that zone right here and started coming back down. Not good. For those of you hoping that this was a bottom in Bitcoin, this right here is your first warning flag. First caution yellow flag. We might be going on down. Ether. I don't know what to say there. That is sloppy. So that looks like what this looks like, it looks like to me this was a diagonal, except usually when a diagonal finishes, we see a deep retrace, but that didn't happen here. So again, this is more unclear price action. It's quite possible this was that was the move. This was just a 3-wave A move. A's can be 3 or 5. Actually looks more like a WXY. There's no clear, real clear subwave, and no clear here. Maybe 5 waves up. Looks like a WXY. ABC potential for right now. This is probably part of a bigger correction that may pop up here and then get continuation lower. Right now, looking corrective. I usually don't talk about WXYs because they're not very clear. I much prefer the ABC, absolutely beautiful correction that hits the proportions. NKD still easing up off that high. Yesterday, look at what it did. Remember I said that we get that green. If this tail ends up closing green, that's bullish. Now we're retesting. We can hold about a 618 retrace, turn back higher, break back above the highs. This is probably going on up right there. Looking down on the smaller time frames of this. Less clarity, but still potentially works. So looking for this to hold in this area right here. Break back out above that high. And take the party higher. That's a global liquidity indicator, NKD, the Nike. I think that money's flowing out of gold, Bitcoin, and into NKD right now. And once NKD runs its cycle, we may see gold and Bitcoin come back again. Dollar. Getting our 30-minute retrace here. Dive in here. This is the exact kind of thing I was talking about. We wanted to see this pop up through the roadmap line. We got pretty darn close to that fib line over here, which is the high to the low down there. Activated here, busted up through 1272, got close to the 1618. Now we're doing a retrace. We want to see this hold this roadmap line. Could poke below, but we want to see it hold, come back up through, break back out above this high, go on up, get above 102. That's probably going to kick off a big up in dollar. How could you play it? Lots of ways. UUP, one of those ways. FXY, probably going down. It's another way. As the Nike goes up and the dollar goes up, FXY probably going down. FXC. This looks like it's going to keep going down too. So we get a little bounce here if we poke through. So this is the, look at this right here. Can it hold and break back up higher and then take this higher again? And that would push the dollar lower. So the charts are, reading between the tea leaves and the dollar. This could come back up here. So we could see a bigger pullback in the dollar. And then this drop out and the dollar go rocking up higher. Apple dumpling, what's crack-a-lackin'? Just sitting here under the target. This may have to chill out for a little while till all these things come back together and we retest support. It's been all the way back here since the summer, since we were busting on it, and things can't just rip forever. Sometimes they got to retrace. Amazon hit the target. If we can hold the breakouts, can go on up to higher targets, 271, maybe even 312. Probably going to retest though. Probably going to retest this breakout of the all-time high. If it doesn't hold, watch out for a retest back down here. Google looks set to run on up to 304. Supposed to be signing, Apple and Google are supposed to be signing some sort of deal in the coming days. Meta still being soft. Looks like we're going for that 618 retrace. Right down here. 580 area. It can bottom anywhere in here. And then set up the bigger bounce. That bigger bounce all the way up here. Same kind of pattern. Just bigger picture, bigger time frame. That was the climb. Here's the 3-wave retrace. There's the 618. Very similar to NASDAQ, what I was talking about. Pushes it up to ridiculous levels. Microsoft, come to Papa. Oh, yeah, come on. Right back down in here. Come on. Oh, that's looking juicy. That similar pattern. Move up, 3-wave retrace, looking for this to come down in here. If it doesn't hold here, might see it down here. So this, we're looking for it to retest the breakouts and then break out all these highs back here. Retest this breakout area, hold that, go higher. If it doesn't hold, probably coming down here like Meta for the 618 retrace. Nvidia, that looks like we're going to retrace. So can NASDAQ break higher with all these big tech potentially needing a retrace? Can it do it on the back of Google going higher? Possibly Amazon going higher. Maybe Apple going higher. Well, our current big dogs, Microsoft and Nvidia, get a pullback. Tesla, shareholder meeting today. This thing looks kind of like a coiled spring right below these. We poked up a new high right there. Can we break it out? This was the high back here, all-time high. We're consolidating right under that. The caution here is we may need some sort of pullback back down in here before we can go. Whales are still buying millions of dollars of calls. I cannot make sense of this. A lot of it's up here at the 600 strike. Be absolutely ridiculous. Nobody's actually buying the shares. Everybody's buying the calls. This is, considering taking my risk off. But we have that shareholder meeting coming up today after the close. I think it's after the close. We'll see what happens. Trying to vote. They want to push a $1 trillion compensation package for Elon if he meets certain metrics, pushing the company to multiple $1 trillion higher valuations. I think it's like $8 or $10 trillion valuation on the company. Netflix can consolidate in here and drop on out. Yeah, after the close. App. Looks like we're going to retrace 618 and take another trip down. SITM. All-time high. Let's see what we got cooking here. Here's the high, here's the low. 429, 522. This kicked off the pattern back here. Doesn't have the roadmap line, doesn't have enough candles, but roughly it should have hit. Looking for that extension here. Maybe that one. And if we really get rocking and rolling up here around 880. Rockwell Automation. So this looks like it had a potential 1, 2, very deep. That can kick the 3 off up to this 560 area up here. If this is going to be really bullish and keep going, 560 would be the upside there. Data Dog still, oh, there it goes. I was like, still working. There we go. There's the breakouts. Cruising up to the target. Great job if anybody took it. I was reluctant. I did not put any risk on that. Breakout. Now we're hitting a resistance. We could experience some little bit of pullback before we push it on up into the target area, up around 220, 230. But that can go even higher. Okay, working on up to 302. Right there. CMI 492. Congratulations, Bobby. Berg Forge Global Holdings. Nice crazy pop. Is it a reversal? It's more of a dumpster fire. Yeah, dumpster fire. I wouldn't touch it. Reverse split. Puts it on the do not ever trade list for me. Coherent popping 174, 192. Next upside there. Off of that last pullback, the bigger pullback back here. 201. Next upside. Planet Fitness. Nice reversal potential. Here's the high, here's the low. We're at the 618. If we can bust through it with a daily close, we set up the potential rally to 118. If we fail here, sets up the potential to take a whole nother leg down. Somewhere down around 80. A little bit of a coin flip here right now. Bigger picture, I thought we might rally based on this big move up, this retrace. 1, 2, 3, 4 would still be fine. So this is one of those like big picture. If you got the cojones to hold on, probably coming up here. Smaller picture. Does it pop right now or does it drop down here? This looks like a 1, 2, 3, potential 4. And it might set it up for that 5 right there. So if we just go higher now, we'll probably experience another pullback here before we get going. Let's kind of how that one rolls. MDB. Let's try and really, oh man. Has not triggered along. Look at that. Even though we were up here, we did not get the close above, and we were back down here, and still can go down to the lows. And we're still below. We have earnings coming up all the way out later in the month. Maybe it's the 1st of December. Light, this one just rock and roll. Keep going. 263, 342. SN. Caution. GDEN. Nice reversal. There's no price action helping know if that's the bottom. I wouldn't touch it. Just no. I am in this with one share off of the lows back here. Craziness. Let's see. I don't even remember what I'm in for. Looks like I'm in at 112. I got in 112 right there. Why didn't I go bigger? Because this was unclear whether we were done here or not. So far, so good. We're right up to the first target. This could result in a bigger retrace before we go even higher. We're in the target zone. If we actually tag this, it's pretty bullish. Right there on 320. I might consider getting out for a little while. Of course, it could just keep ripping, so maybe I just hold my one share. RL, nice little pullback, probably going up to 394. STX, keep rocking and rolling. Next target 474. Hyatt Hotels, Hyatt House closed here, and just sitting on the roadmap line for months. MSTR, MTSR, excuse me. I wonder how many people get this confused. And I don't have anything to say about that. Looks crazy, that chart. And that looks like a dumpster fire type price action. I would just be careful. Marvel. Yeah, we set up the potential to break out here. 146 is the target. Could take a while. Could take 7 months or longer. HCC. And nothing there tradable that I would get involved in. This one probably coming on up 69.76. Toyota Motors. That was not a good place to turn down. This price action has been very sloppy. Looks like to me this is probably a move down, a retrace, and we might see a lower low again on Toyota. GNUG probably coming down for the roadmap line. Google, yeah, already covered Google. ARM probably coming down for the roadmap line, potentially. Baba. I may roll my December out to January. Looking for a pop on K-Web. This looks, there's so much of this that looks like it could pop. We could get all the way up into the 50s here. Pretty easy. That'd be a pretty smoking trade right there. Sizzle still being soft on the sizzle. Let's see that pullback right there. Yeah, we're in the vicinity where we can go ripping again. Put it right up in the danger zone, potentially. It's kind of funny, that move up, that retrace, that move up, that retrace, that move up. That one came a little shy. But, yeah, a little shy. CLS. Hitting targets, be careful, watch for the top. Let's look for some pullbacks. Decliners, Duolingo. Oh yeah, look at that. Man. Man, oh man. So this looks like we're going to come on down to 140 probably. Might be something to think about if we get down in that area. Find support, get back up through the 320 area. This could go crazy up from there. I don't know. I mean, it could fail too. So, hub spots. Potential to go down further. 300, 250. LU. Still looking for that roadmap line. Pull back there. Roadmap line. Ooh, Elf Beauty. So was that the B wave? This top, that retrace, that 618 held right in here. Turning back. Does it get that third move down? Supports it. Oh, DoorDash got whacked a bit on earnings, saying that the market outlook looks soft. I don't know. Not sure what's up with the chart here. BDX pushing on lower. I wouldn't touch it. Costco still needs to visit down here, down around 826. I mean 862. Dyslexia. FTNT pullback, but stayed above the 69 I gave out yesterday during Market Masters. Celsius finally got a roadmap line retest. So what am I watching? Let's finally. So this could get a pretty significant retrace here. We could come on down here if that was played out on the first move up. So I need to see this hold and turn higher again. So this looks like we might see some downside here for a little bit on Celsius. Root. I don't project time frame very well, Bobby. Hardest part of this game. This pattern, the bounce pattern, if you're on the right time frame, average is 45 candles to, let's just go look at some daily setups and talk through this. Here's these daily setups. Here's the high. Here's the low. This is what I have time frame for. That right there is the activation. Today, entry. Target right here. 45 candles on average. Standard deviation on that is 35. So you got to add 3 standard deviations to get the 99%. That's 150 candles. Now, 150 candles is not trading days. I mean, that's trading days, not calendar days. That's trading days. Calendar days is more like 210. That's 7 months for this daily pattern. Now, some of these patterns, if it's the weekly pattern, that's weeks. All of a sudden, you're looking at 150 weeks. That's like 3 years. So this is why I say you got to be careful on time frame. You could be in some of these quite a while. And you might be like, well, how do you know this, that, and the other? Like this one right here, 44. There you go. This is probably going to work out. And this is like all the things I look for to get involved in this trade. It just may tie up your money for a while on this daily pattern. If you don't want to tie it up on the daily pattern, look for the bounces on the 30-minute time frame. Get back here, this one, same statistics. 45 candles. The candles are 30 minutes. 3 standard deviations, 150 minutes. 150 candles times 30 minutes. That gets you 99 percentile. Should come in that time frame. Works the same way all the way down to the 1 minute. You can find these 1 minute bounces. Same kind of deal. And maybe like, well, I'm not sure that you know what you're talking about. It's okay. I've literally tested these. Tens of thousands of these. This is how many trades are in here. Like thousands. Almost 4,000 tickers. Talking about 56,000 trades. Covering 20,000 days. Or 14,000 trading days. Average percent profitable. On average, 75%. Average duration. On this one, 42 right there. When I add in the other time frames, it rounds up to 45. So that's where that all comes from. BSR. Here's the high, here's the low, there's the potential entry, 32.21. Not as great on the profit factor. Schiff. Entry, 71.52. Statistics don't matter, so what we're looking for is more than 30 trades. This number has to be greater than 30. Otherwise, these don't mean anything. If it's less than 30, we fall back on that statistical average. 74.7, 1.2 on the profit factor. Target and everything's still the same. Stop is always dollar below the low. Whatever pattern it is, always dollar below the low. Sometimes that messes up your risk reward, so be careful, especially on low price stuff. A dollar on a $10 stock is 10%. Dollar on a $100 stock is 1%. Right there, looking for 10. Like I said, dollar on a dollar here is like a lot. That's a big stop. And has an infinite profit factor for now. DAC. Here's the high, here's the low, there's the entry, 98.19 target. Statistics don't mean anything. Here's the high, here's the low, here's the entry, 20 on the target. INDB, this one kicked off and worked back here, kicking it off again. Here's the high, here's the low, there's the entry, 70.45. And I like the win rate. I don't like the profit factor. MNRO. When the profit factor is below 1, that means it's a net loser over time, especially when it has statistical, more than 30 trades. And that means the losses are way bigger than the wins usually. 1947. And negative profit. We're seeing a lot of negative profit factors today. Nally, this is a real estate investment trust. Doesn't always work, but it is the pattern. 2280. You can see down here 50. It's kind of 50-50 and the negative profit factor. So real estate investment trusts in general don't work very well. Just don't. Even though they're in the statistics. So 30.29. Rivian. Here's the high, here's the low, there's the entry, 16.76 on the target. Stabba, yabba dabba stabba. Potential entry, 41.50 on the target. TMP. This one's produced a bunch of entries lately. Worked out. Next one. And 73.29, 33 trades, 66. Not the greatest and negative. I probably wouldn't trade it, but it's been working lately. Hadn't really been trending. It's just been chopping. And highs, lows, 41.93 targets. Another one that just doesn't look great. None of those entries look super awesome to me, but to each their own. And there we go. Right down to the limit. Can we hold it or do we fold it? We did overlap here, so. NQ already overlapped. So now probably going lower. All the stuff I talked about, void now. Watch out, everybody. And for those of you who've been following the NDX trade, this is, unless this turns around, this is not the kind of day I want to get involved in. Where we start out down 400 points. If we keep drifting down lower, probably not a day for the NDX cash, NDX beer money trade. If you don't know what that is, come follow me on X. I'm going to post them on X. So, links in the description. Be careful out there. I'll be on Market Masters here in about an hour and talk trades. Have a great day, everybody. We'll see you again soon. Bye for now.